Good morning. This is Larry McMillan with a stock market update on Monday, February 12th. So the S&P and the NDX, the Nasdaq 100, and the Dow are all making new all-time highs almost daily. And so those charts are very strong. And for that reason alone, we're still holding our core bullish position. There are a few negative divergences appearing, but they're not actually sell signals. For example, the Russell 2000, which has measures more what small caps are doing, is not keeping pace. It's not near a new high. Those are just sort of alerts. Keep paying attention, but at this point in time, we're still staying long. The S&P has moved above its 4 standard deviation modified Bollinger Band, which means that the potential for having a volatility band sell signal has dissipated. And so that whole process of potentially setting up a new sell signal there will have to begin anew. The put-call ratios, equity-only put-call ratios remain bullish because they've turned downward, but they're very low on their charts, meaning that whatever bullishness they are displaying is coming from an overbought condition. I mean, the market can stay overbought for long periods of time, so that's not a sell signal, but perhaps a warning sign. The breadth of the market has been poor, and we had been on a sell signal from breadth that looks like that's probably going to be stopped out today. But cumulative breadth has not kept pace with the market. And so, again, that's a negative divergence. Sometimes that can persist for long periods of time. But again, the way we usually treat that is that we don't ignore any sell signals. If you're feeling especially confident on the upside, this is sort of a little dash of cold water in the face to keep you paying attention, and don't ignore a sell signal. Right now, though, we don't have any sell signals. In fact, new highs versus new lows keeps making another bullish move one after the other. New highs are dominating new lows. The VIX has stayed low, so the trend of VIX is downward. That's bullish for stocks. The construct of volatility derivatives, that's bullish for stocks. So all of these things are positive right now. And we're getting extended, I would say. I mean, support now, except for some sort of short-term support, perhaps at like 49.50, 4,900. You're really talking support back at 4,800. So that's a pretty big pullback, a couple hundred points on the S&P just to reach support. But that's what happens when the market goes up almost every day for some period of time. Once it broke out over 4,800 a couple of weeks ago, it's been straight up. Obviously, there was a lot of short covering. There were a lot of people that needed to get, more along, get their portfolios more in line with being, 100% invested, that sort of thing. So we're just riding the trend upwards. We are rolling calls up as they become deeply in the money. That protects your profits, and also if there's a nasty correction, you don't really give back all that much. So I invite you to visit our website, take a look at our daily letters, and we also have been doing a few seminars lately. You can tune in as to when those might be occurring. Meanwhile, have a great week trading, and have a happy Valentine's Day.